Welcome back to the Dividend Diplomat's YouTube channel. You've got Bert and Lanny, and we're here to bring you another video session.
You know the drill by now, everybody. Come on. Smash that subscribe button if you're not already subscribing. Give us a thumbs up. Turn that thumb blue. Every thumbs up helps us as we continue to grow our YouTube channel.
Not only does every dollar count, but every blue thumb in this world counts. So we are counting on you to turn that blue.
Yes. Please, we don't need to get the hammer out and start turning your thumbs blue that way.
No, but today we're bringing you a great video. Bert and I are going to dive into 5 technology stocks that not only pay you with their products and services, but pay you with a handsome dividend.
So why did we want to talk to you about the technology sector today? It's very simple. The technology sector is on fire. If you turn on the news, you watch CNBC, read some articles at night, you can see that every technology stock continues to climb. Prices and valuations continue to grow. We all know the Apple stories, the Teslas, the Snowflake, all those big stocks keep the market climbing higher and higher. But us, what are we? Laney, I think we're dividend investors, right?
Says some people, but no, yeah, we are. Pride and Trude is dividend investors, and if we're looking at any industry, including technology, we're looking for stocks that pay a dividend. And furthermore, it has to be a better than average dividend typically for our portfolio. So that's why we also do want to take a look at the technology industry to see which dividend stocks are on here. And we're going to bring you what we think are the best 5 technology dividend stocks.
And what's interesting from this list, as we'll talk through it, we actually own companies on this list. So we've put our money into these technology stocks too. We clearly believe in them. So we can't wait to bring them to you, talk to them, and to put a nice little dividend twist on this technology sector.
And to see our dividend portfolios, we'll put a link in the description so you have direct access to go look at what stocks we own within Bert's portfolio and within my portfolio. And then you'll be able to see each technology stock that we own and talk about here on this video, as well as the entirety of the dividend stock portfolio.
All right, so everyone, and just as a reminder before we start talking about the stocks, how do we find these dividend stocks that we invest in? We use our Dividend Diplomat dividend stock screener. It's 3 simple metrics. We talk about it in almost every video, so I'm sure you're used to hearing about it. But if you're a new subscriber, a new follower, the 3 metrics of our stock screener are the PE ratio less than the S&P 500, the dividend payout ratio less than 60%, and a history of growing your dividend and a strong dividend growth rate.
Now these 5 technology stocks that we're talking about, they don't necessarily meet all of that criteria, but we'll show you the dividend stock metrics with each technology stock that we do talk about to see how it actually pairs with our dividend stock screener. So Bert, what have you kicked us off here with the first technology stock that we want to talk about today?
Yeah, absolutely, Lanny. Let's go ahead. The first one on the list is Microsoft, ticker symbol MSFT. Microsoft is always in the news as their price continues to climb. They've blown past the $1 trillion market cap mark. One of the largest software companies. There's chances are, if you're working from home, you're tied into the Microsoft Office suite in some capacity. The company founded by Bill Gates has weaved its way into business and everyday life like no other company.
In addition, you saw in the news with Microsoft and Oracle their battle for TikTok. Obviously, Microsoft didn't win that. I don't know what they were going to win, whether they were going to buy the TikTok US arm, or if it's just to provide the suite, security, and data storage that TikTok is currently looking for. Oracle won that, but Microsoft, obviously, as Bert said, has been in the news heavily lately.
Yeah, and they may not have won the TikTok bidding, but you know who was the winner last week? The dividend investors that own shares in Microsoft, because Microsoft announced a 9.8% increase to their dividend shortly after they were taken out of the bidding for TikTok. So as you can see, the shareholders are getting a very nice increase in their payout, which is welcome for a company that has continued to take off in 2020.
Right, and I think their stock price year to date, I believe, up over 25%. There's been a little bit of a pullback in that stock price ever since September began. Obviously, when we look at the metrics of Microsoft, you'll be able to see what their ratios are right now.
To Lanny's point, let's take a look at some of the ratios here and see, with their current share price of just over $200 and their forward EPS of $6.46 per Yahoo Finance, their PE ratio is 31 times, which is just a hair above the market, which is, you know what, incredible that it's just a hair above the market, which has a PE ratio of 28.5. While they're trading at very high valuations, as we mentioned earlier, the tech sector has been on fire, propelling valuations for technology stocks and the overall market higher and higher.
And the reason why it's pushing the overall market is because, hey, these are trillion-dollar market cap companies. So when you look at the top companies in the world, the majority is made up of these companies. So if these go higher, the overall market goes higher.
Yeah.
So when you look at the other dividend metrics that Microsoft has, their price to earnings ratio, again, when you look at the forward earnings, is slightly over $6 in earnings per share. So yeah, they're trading over 30 times. And their dividend payout ratio, given that their dividend is only $2.24, their dividend payout ratio is a safe 34%. We typically like the 40 to 60. So Microsoft is right there, plenty of room to reinvest back into their business. But Microsoft, as we saw last week, has a ton of room to continue to grow that dividend income stream for their shareholders.
And with their $2.24 annual dividend, that puts them at a yield of just over 1. It's 1.1% today at the time of the filming. So it's lower than the market and typically a little lower than we see. With some strong price appreciation, you would expect a slightly lower than the market yielding dividend yield. And what's fascinating is that it factors in this 9.8% dividend increase that they just announced.
All right, now that we've talked about Microsoft, we're going to slide right into dividend stock technology number 2 with International Business Machines, Big Blue, IBM.
Man, ticker symbol IBM. It is one of the legendary technology companies as well. What was unique about IBM this year, Lanny? Did they join a special club?
They joined the Gentlemen's Club this year. No, kidding. They actually joined the Dividend Aristocrat list. They marked their 25th year of consecutive dividend increases. Now, the increase was barely there. It was below 1%. So we still tip our caps to IBM as they've been able to continue to increase that dividend. I know they're probably eagerly, waiting to start buying back more shares, as that's what they're very known to do, which is a beneficial way to keep your earnings per share strong. Now, they're trading at just under $123 per share, and analysts actually are projecting quite a bit of earnings.
Yeah.
How much are they projecting in 2021?
Yeah, $12.22 per share of earnings. So that's a significant amount for the company.
Yeah. So when you take the share price, dividing it by that projected earnings per share, their PE ratio is actually a very handsome under 20, which is a lot better than what we just heard from Microsoft.
Yeah, no kidding, Lanny. So with the earnings too, the company pays a $6.52 annual dividend. So that puts, with the $12.22 EPS, that IBM calculates a dividend payout ratio of 53%. So it's below our 60% threshold that we typically like to see, which is great. Two, what I like to see as well, with Microsoft having a 34% dividend payout ratio, IBM having a 53%, the one thing you're going to notice is there's a significantly higher dividend yield here for IBM. Calculating their current dividend yield is over 5% at their current share price as well. So higher payout ratio, higher dividend yield.
Yeah, so IBM really pays you 3 times the overall market at over 5%. So you're definitely getting some, really returns in dividend income for you, and a way to really generate some passive income for your portfolio. They always think that IBM's in that, slow growth cash cow machine, and can't argue against it. I know their acquisition of Red Hat is supposed to continue to add to the top and bottom line of their earnings. So hopefully we get to see that in the future. And I think that's what analysts are also very big on right now for IBM.
So let's take it off to dividend stock number 3. This company has also been in the news a lot lately. They have a stock split. They just announced a major product launch date a few weeks ago. Company number 3 is Apple, ticker symbol AAPL. We all know the story with Apple and how they've become ingrained in our lives and their amazing product launches. It's been a really cool company to see and follow grow over the years.
So Apple is trading just under $110 in per share from the share price, and the analysts are currently projecting under $4 in earnings on a go-forward basis. So they're trading at just around the market right now. I know I wrote an article, about is Apple stock for dividend investors, and right now I think that the valuation is still a little high on Apple, especially with that small annual dividend of 82 cents per share. It just doesn't provide the bang that you need for owning their stock. Because when you actually look at the metrics, the dividend yield is under 1%. You're pretty much getting what your high yield online savings account's getting. However, you are getting dividend growth, but the dividend growth itself has been under 10% the last 2 years.
It's definitely slowed over the last few years. And the one reason why we wanted to bring Apple onto this list, as Lanny said, it doesn't check a lot of our investment boxes. However, there are a lot of technology companies that are getting a lot of publicity. We want to show you which ones are actually paying you a dividend versus which ones are not, and you're just banking on their appreciation to see your investment have some solid returns.
With Apple, they're becoming, their cash position, cash cow maneuvers are pretty high. They keep releasing new subscription services, trying to get you into that ecosystem. They just came out with the Apple Fitness, what's going to play well with their Apple Watch. Obviously, you have the Apple TV Plus. You've got the Apple Music. They're really trying to get everything that you do on a day-to-day basis that you may have subscriptions elsewhere under one hood, and that is their hood.
Yeah, and once you get somebody under the hood and you get them ingrained in the product line, it is very difficult to switch.
You close the hood and their legs are hanging out, but you're just trying to shut the hood, and you finally get it, and you realize you're watching a nice clip from Casino. Sorry about that. It's just getting into my mobster movies.
No, Casino is just one of those movies that every time I happen to see it on, no matter where it is in the movie, I just stop and watch it all the way through. I love that movie.
So Apple, take note. Maybe add, a nice mob movie to the Apple TV, umbrella. Now going into dividend tech stock number 4, we're bringing you CISCO, and I'm not talking about the thong song. We're talking about Bert and his WebEx videos. CISCO, ticker symbol CSCO.
Yeah, so CISCO is currently trading just under $40 a share at the moment. Analysts are projecting $3.10 per share. So that gives you a PE ratio of just under 13x, which is, again, significantly lower than all the other companies we've listed so far and well under half the PE ratio of the current market that it's trading.
The competition within the space that Cisco's in from a, network infrastructure, virtual platforms, as well as obviously web-based video conferencing because of Microsoft and their Teams app, because of Zoom and their Zoom app. And it kind of goes across the board, as I know even Apple's FaceTime is in the mix, Facebook's Messenger is in the mix.
Google Meet
is there now. So, the competition has increased, especially as the schools are still being partly remote or full remote. So the demand for video conferencing is high, which obviously should do well for Cisco, except there's a lot of kids in the sandbox right now.
Yeah. And that's where some of these larger technology companies, they're positioned to withstand some of these changes and disruptions in the market that happen. Obviously, when you have a new entrant like Zoom and their business line is built around the video conferencing, that's one thing. But Cisco has time to build the new product, adapt, and potentially use all their cash on their balance sheet to acquire somebody if there's a new entrant that is doing better than them and they want to add that to their product portfolio as well.
Now, I know I've been acquiring Cisco stock for quite some time. I think I'm approaching close to 150 shares. So at a share price under 40 with the dividend yield above 3.6% and a fairly safe dividend payout ratio below 50%, really in that sweet spot, it's a good dividend stock to look at for your stock portfolio. Technology dividend stock number 5, we're going to talk to you about NetApp, a company that you've probably never heard of, possibly, as well as a player in the industry of technology that maybe only the tech people know of. Their ticker symbol is NTAP, and we wanted to bring them and put them on the stage as they're in data storage, cloud storage, really I think trying to battle the new friends that have a ticker symbol of snowflake.
So with their current share price of $42.61 per share, their forward earnings for 2021 are $3.40 per share. That is a PE ratio of 12.5x, which again is right in line with CISCO and significantly below the other three companies and the broader market we have discussed in here.
Now, at a dividend per share of $1.92, dividing that over the expectations of $3.40, they have a pretty middle of the road dividend payout ratio at 56%, which is below 60 that we like to see. So the dividend, as of right now, appears safe.
Yeah. And with that, they have a dividend yield of 4.5%. So that's a very high yield, very strong compared to the broader market as well.
Now, the dividend growth, though, on this is, spotty. You're not going to see it year after year. Recently they went from 40 cents to 48 cents. That was back in 2019, 2020 being a pandemic year. They haven't increased their dividend this year. We may see one in 2021, but at least knowing that 8 cents over 40 cents, a 20% dividend increase is not too shabby.
Yeah. So there we have it, everybody. We've listed 5 technology stocks that pay a dividend. The 5 companies are Microsoft, IBM, Apple, CISCO, and NetApp.
Please let us know which of these 5 that you own in your stock portfolio, which one is your favorite, which ones you may have questions on about some of the metrics that we discussed, which one you're looking to see maybe have a pullback, or which ones you think is the best one to buy right now. Please tell us in the comments below.
Yeah, and if we didn't include any ones that you own and that you like that pay a dividend in our 5, please let us know in the comment section as well. We know there are more than 5 technology companies that pay a dividend. However, these are the 5 that we like and that we're going to be keeping an eye on over the next few months in the market.
Before you leave, please don't hesitate to subscribe to our channel. Give us a thumbs up if you enjoyed this video, if you found it informational, educational, or helpful in your investment journey to financial freedom. We're here to help you, as always. This is Bert and Lanny from the Dividend Diplomats.
Over and out.